Trading more pairs is what's causing you to fail your prop firm challenges. In trading, less is more, especially with prop firms. In this video, I want to talk about why trading less pairs will make you more profitable when you trade with prop firms. The problem is when people trade with prop firms, they think that they need to trade a lot of pairs to make a lot of profit, and that could be killing you. And I'm going to explain that clearly in this video. Now, if you don't know me, my name is Sheldon. I basically make content and share videos on things that help me in my trading to become a profitable trader. I've been trading the Forex market for the past 8 years and full time for the past 2 years. And I've been funded with multiple prop firms, and I just want to quickly share a few tips with you guys in this video as I just mentioned. So just a brief intro to prop firms. If you don't know about prop firms, they are basically companies that give you funding based on a fee you pay to get a certain amount of funding, and then you trade with that funding and you basically do a profit split with a prop firm where you keep a large percentage of the profits. Now, the problem with prop firms are that they have a lot of strict rules in place. For example, they have a max drawdown rule, a max daily drawdown rule, and they have strict profits that you need to meet when you want to pass that challenge to actually receive the funding from the prop firm. And to be honest with you, prop firms were designed for you to fail them, because the more people who fail prop firms, the less people the prop firm need to pay out on a consecutive basis. Now, what a lot of traders forget when they trade with prop firms is that they think that the more pairs they trade, the more money they're going to make. But that's not the goal with a prop firm. You should not focus on just trying to make a lot of money. You should try and get funding, and then the goal is to survive as long as possible, where you consistently make payouts. So basically the goal isn't to trade more, it's to survive longer. Because if you have a funded account, the longer you survive, the longer you are receiving payouts and actually really making some good money through trading with prop firms. Remember, every trade that you place, you are adding risk to your prop firm funded account or your challenge account. So every trade you place, you are adding risk. And the more pairs you trade, the more risk you have, because you are open to taking more losses on a variety of pairs. Where if you stick to one pair and maybe later on move on to 2 pairs, that's fine. But when you trade with one pair, you are reducing your risk of taking a lot of losses by a very large number. When I say this, knowing your stats is key, and it's super crucial. What do I mean by that? Let's say you trade the Euro US dollar and you're only trading one pair. So if you know your stats, you need to at least trade that pair for 1 year or go and back test it for 1 year. And then you need to get these key things. You need to know what is your win rate on that pair? What is your max consecutive losses on that pair? What is your max consecutive winners on that pair? And what is your risk to reward ratio on average on that pair? Now let's say with a Euro US dollar, you've done your testing for 1 year and your win rate is, let's say, 60%. Let's say your max consecutive losses on that pair is 4 in a row after doing your testing. You can even test more than 1 year if you want to get a better statistic. But let's say you're just for this example, your max consecutive losses is 4 and your average risk to reward ratio is a 1 to 2. Now, that means that when you trade with a prop firm for, let's say, a $100,000 account, let's say you have a $100,000 prop firm account, and you know that if you only trade the Euro US dollar through your testing, you can take 4 losses in a row. But you know that after 4 losses, let's say you have a $100,000 account and you stick to 1% risk, now you're down 4%. So you're only down $4,000. But now let's say you know that your next trade is going to be a winner because the probabilities will play out. So after 4% down, you take another trade and you're maybe then in a profit, or you take maybe 1 or 2 or 3 wins after those 4 trades were losses, and then you're back in profit. But your risk is so much reduced and your psychology is protected, because you know that after taking 4, maybe max 5 losses, the winners are coming. Now let's use the same scenario. You have a $100,000 trading account or with a prop firm, and you add another pair. So you do your testing, you get your statistics, and the other pair you add is, for example, GBP USD. And you know your max consecutive losses on GU is 5 in a row. And you know you have all your other statistics, but the most important thing is you know that your max losses in a row is 5 on GU. And let's say you add another pair, which is Aussie US dollar, and you add that pair and you've done your testing with the Aussie US dollar, and you know with that pair your max consecutive losses is 4 in a row. So now, moving from trading only Euro US dollar, you added 2 more pairs, you have 3 pairs. And adding all their max consecutive losses together, which is 4 on EU, 4 on AU, and 5 on GU, that puts you up to 13% at risk at one time when you go on a losing spree. Now the problem with trading is you never know when the losses are going to come across all those currency pairs. You might be taking one loss on EU, then a win on AU, then a win on GU. Or you might be taking a loss on EU, loss on AU, and a loss on GU. And then that losing streak kicks in, that consecutive losses kick in. And you might blow your account because, you know, if all those losses come at the exact same time, you might hit your 10% drawdown, which the drawdown is on most prop firms out there. So I need you guys to really go and test this and really go and look at this, because this is a very big thing, and I used to make this mistake so many times when I've done prop firm challenges. And now currently I only stick with 2 currency pairs because I know how to trade them. I've been trading them for a very long time, and they are, you know, very consistent to me, and I know their statistics like I know the back of my hand. So I know that I can only take 4 losses on the one, 4 losses on the other, and you know, I've tested it over and over, year over year, and you know, or year let's say year by year, and I just know how they work and I'm very confident in them. So guys, I hope this video helped you just to understand that trading more pairs with prop firms is not necessarily a better thing to do. It might cost you more at the end of the day, and it might, you know, play with your psychology in such a bad way that you think, you know, I'm not a profitable trader, but actually it's just you trading too many pairs, and that's what's causing you to blow your prop firm accounts. Now, if you trade your live accounts where there's no drawdown rules, no max drawdown, no daily drawdown, that's okay. Then you can maybe take, you know, trade 3, 4, 5 pairs, but you know you can handle the drawdown. But with a prop firm, it's better to trade with less, because less is more. Now, to end of this video, if you liked this video and you want to see more content like this, please remember to like and subscribe. And I just want to end by saying, if you know nothing about Forex trading and accidentally stumbled upon this video, you can go to the link down below in the description. I actually offer a completely free introductory beginner course into Forex so that you guys can understand the basics of it, and you're actually going to save money in the long run by not making the wrong choices and, you know, falling for all this hype around trading, and actually understanding what trading Forex is really about. So click on the link below, and you know, please comment in the video. I'd like to hear your guys' opinion. Maybe this is an eye opener for you. But anyway, see you on the next video, and thank you so much for watching.